What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, April 11th. All right, guys, Nvidia stock here today up $16.85 per share in regular trading hours. That's plus 1.97%. Up a little bit here in after hours as of right now. Wherever that ends up here tonight, take it with a grain of salt. Volume is bound to be low. Some big changes happening here on Nvidia today, so let's take a look at this thing, pull out everything we possibly can, whatever the market will give us, starting by peeling back a layer of the onion and trying to get some bias out of the volume profile here on the 5-minute chart. Guys, Nvidia is a daily upload here on the channel, so if you haven't done so already, please subscribe to the channel. Helps out tremendously. Let's take a look. Now, the moves that I'm primarily interested in here on the 5-minute, it's really going to be one. And that's that giant push that we got off the open. From there, the remainder of the day was essentially just consolidation, which is telling in and of itself. But let's take a look at that push. You can see here that throughout the move, well, first of all, we got that high volume opening bar. We got additional volume, which I would not, it's not surprising to me that we got additional volume on that large green candle pushing up through that psychological area, which is kind of the bottom end of this channel we've been discussing of 850. A lot of volume pressing through that level is not surprising. And we held a bit higher volume well into the day compared to what is normal on really any blue chip stock. Usually we see a really quick immediate fade quickly. It happens fast. We held a bit higher volume into the day, and then as the move kind of ended, we of course had some red candles mixed in, but they were small. As the move kind of ended and we moved into the consolidation period of the day, which was really most of today, volume faded hard, eventually getting back down into what is contextual. So, I mean, that's some clear bullish bias here on the 5-minute. Let's move on to the 30-minute chart. Take a look at those self-fulfilling prophecy psychological levels that you should be at least, and a whole bunch of traders are going to be paying attention to here tomorrow. Start with the 30-minute. Again, you'll notice it's very clean, right? All I have is the 50 period and the 200 period. I don't want fancy. I want real psychology. That's all I care about. And how do we get that? We go where the eyeballs are. And this was where the eyeballs are, at least on the 30-minute, which is a very popular time frame. So if we look here, we were discussing in yesterday's video, guys, how we had kind of been struggling to reclaim the 50 period here on the 30-minute chart. Well, today we didn't struggle even a little bit. We ripped up through there. Listen, we never got a retest. I actually like retests. I think it puts any doubt that remains in the other side, in this case the Bears' minds, it puts that to rest a little bit because they had their attempt and they failed. Well, here you're going to have a lot of bears looking at that and saying, well, we didn't really get a test. We just got a push and consolidation. We're likely to see a retest. That's going to be the psychology of a lot of bears, which is why I prefer to get it out of the way immediately, which is why I'm always, pressing about the high volume break, low volume retest, high volume bounce. We didn't get that today. We just got a high volume rip. Now, listen, I'm all for it, okay? I'm just saying ideally we would have seen that retest, but here's what I'm looking at in the near future. Bulls, tomorrow. Backtesting the 50 period, that would be the retest, right? Obviously, you want to see a bounce on high volume away from that area. But the goal, like the optimal scenario on the 30-minute, is to reclaim the 200, which again, high volume break, low volume retest, high volume bounce away from that level. Okay, bears, any test of the 200 period, you guys want that to kind of act as your safety net to the upside, right? Because you're bearish. You want to see rejections off the 200 period and get back below. Your goal is get back below the 50 period as soon as you possibly can and hold. Not a break for a minute and a half. Not a break for 45 minutes. And then you're wondering what happened when it bounces. Right? No, I mean a break and hold, ideally with that retest mixed in. All right. Gives time for the volume to really come in and the sample size to come in and agree. Now, the 4-hour chart, let's take a peek. You look here and, we've been talking about this channel on the 4-hour for, it feels like a week now, maybe a little longer. Well, this channel between those two, the 50 and the 200, right, is now closing in. Okay, we were on, kind of straddling the 850 to 9 psychological channel, that round number channel, and now we're closing in. The 200 is lining up with 850. I like that. That's a good thing. Okay, that adds a little bit of extra strength to that potential support level since we're currently above it. This 50 period, this is a really interesting scenario because you have to think about this logically. Okay, if this 50 period were right at 9, to me, I think that's a bigger problem than if it's below 9 and separating itself to the downside. The position that it's in right now gives the bulls an opportunity to reclaim, this and this separately rather than in one go. Okay, having to do so in one go requires a lot more strength, likely a lot more volume to break through the psychology of that being a beefed up level. Because everyone's looking at the 4-hour chart, everybody. So doing it this way, I look at this and I think, okay, well, it actually gives an opportunity to break this and hold both of those levels in 2 separate events, whether that's same day or over the course of multiple days. It's like, would you rather have to fight off one Barracuda twice, 2 different times, or a great white where, come on now. I'll take, I don't want to do either, but I'll take the lower threat twice rather than the larger threat once, if that makes sense. But you bears, any test of that 50 period here on the 4-hour, a rejection off that can set you guys up for a test of that great white down at 850 because you have the 200 period kind of beefing up that level as a potential support right now. All right, now the daily chart. This one's going to paint the most obvious picture, and look, Nvidia on the daily is becoming very much so in play as that 50-day moves upside. It's above $800. It's heading up toward about 812, 813 right now. And you remember yesterday we were talking, we had closed right about at 850, right around that $850, that $850 level. And that was the bottom end of the channel between 850 and 9. Okay, it was time for a bounce, right? We were looking for a bounce, at least if we were bulls. And that was kind of necessary, unless we were just going to have another flat day. We now find ourselves about halfway in between that channel. All right, but neither, honestly, guys, neither bears or bulls are kind of out of the woods yet. This stock is going to have to pick a direction out of this tight $50 channel between 850 and 9. Can't trade sideways forever. Now, this leaves us with a really simple analysis of the daily, right? If you're a bull, 850 you want to see as a support, a strong support, and 9 you want to see it act as weak of a resistance as possible and reclaim that and just get out of this channel to the upside. If you're a bear, 9 as a strong resistance and 850 as a weak support is your ideal. And of course, when you're looking at the daily, when something, to put it really simply, when something that you want to happen happens, the more volume the better. When something you don't want to happen happens, the less volume, the better. Okay, you want the sample sizes to make sense and fit your bias. Because, what's happening in the price action is happening regardless, and you should at least have the volume back you up. All right, now implied volatility, guys, it's still low. It's essentially flat here today, but it's low. Okay, if you own contracts, you're likely seeing some IV crush from the Greek Vega. All right, but it's low compared to the most of 2024. So this is going to be a more favorable time for new options buyers to come in and buy new contracts, okay, or just new contracts in general being bought by anybody. I've been IV crushed one too many times in my life, and I'm not a fan of buying options when IV is high, to say the least. But look, guys, I think if you could take anything away from these videos, like seriously, anything at all, please have it be that context is everything. I see it lost on so many newer traders, especially like on the internet. So many people don't understand that concept of context because it's everything. If you look at this and you're just zoomed in and you're like, wow, IV is really low, okay? And then you zoom out and let's say you're buying contracts. Here, let's make this a better example. Let's say you're zoomed in like this, okay? And you're looking back, okay, the last month or so, wow, IV is really low. Let me buy contracts for 9 months out because IV is really low. Well, is it though? Because if you compare it to that time frame, like you're pretty zoomed in, right? So 9 months out, let's say you're buying like in this region because you were too zoomed in. 9 months out, you want to compare it to, I would compare to the last year or so of IV. So you look back to the last year or so, it's not really all that low, right? It's actually above the average by quite a bit. Every trade is going to have a different story behind it. If your trade is for a week, why are you looking at IV for the last 3 years? Right? Look for the last couple of weeks. If the story of your trade is you're buying leaps for 18 months out, why do you care what IV is compared to the last 7 days? Right? Look at the last 2 years. Context is everything, right? That goes for the volume profile, it goes for the psychology, it goes for everything, but it's especially applicable here with the implied volatility. All right, now, expected move. Let's take a look. So the next expiration we have here on Nvidia is, again, Friday at the close, April 12th. We have 2 trading days between now and then. It's plus or minus $22.55 per share is the expected move by Friday's close. Again, no earnings or anything on tomorrow, Thursday, or Friday. So realistically, we can go ahead and kind of divide that by 2. That leaves us with about $11.28 or so per share, plus or minus. But again, we have to add 50%, okay? Because, we don't know if it's going to be a 2-day green streak Thursday and Friday, a 2-day red streak, or a mix. So I like to add 50% to that. That gives us about like $16.91 or so, plus or minus, of expected movement in Nvidia each day, okay? Now that's the volatility expectation. One more thing we can do to add to the directional bias, the understanding of what we're getting out of the market here directionally. 1.25 million total contracts were traded today. 673,000 of those were calls. 578,000 of those were puts. So we're seeing a little bit of a call side bias here. It's not tremendous, but it's there. But look at this, the short-term speculators, the 0 to 20 delta range. 234,000 calls and 263,000 puts. It flips, right? Again, it's not tremendous by any means, but we're seeing a very small put side bias, bearish bias out of the short-term gamblers. We'll call them speculators. Compared to a small call side bias, bullish bias on the overall. Okay, which tells us that since the short-term speculators, that volume is going in to the overall with the mix of like the midterm outlook, the at the monies, right? The in the monies, which on average is going to be a bit more of a longer-term outlook. Again, that's the average expiration. Of course, there's long and short for any delta range, but on average, that's the way that it typically lands. That means that if you have a bearish bias in the short term, but a bullish bias in the overall, right, you're getting more of a bullish bias somewhere else. In this case, you can see it's kind of like that 41 to 60. We're seeing 206,000 calls, 115,000 puts. Those are those at the monies. On average, that's going to be more like a midterm outlook. Listen, guys, I love Nvidia. I love the company. I love the stock. It's a great stock for option strategies. I will trade it intraday sometimes if it presents itself, but this isn't a stock that I'm sitting scalping 6 hours a day. There's no edge in doing that. I tried it for a few years, and guess what? It was a waste. It wasn't a waste because it led me to, I guess, move on from that. But I dug through the stats, and I'm sitting there, and I'm like, I'm predictably losing money. This is such a waste of my time. I would probably be better off sitting at a blackjack table for an equal amount of time. I'd be left over with more money. These big blue chips, guys, they have to be traded intraday. Like if you're going to try to day trade these stocks, they have to be traded on setups that have edge. I still trade these, okay, but it's not like many times a day. To get my volume of trades up, I trade in-play stocks. Okay, if you don't know what that is, I come check out what we're doing with in-play stocks in the Roensch Capital Gold server. These are stocks that are moving each day. These are the stocks that are overrun by human, emotional, beatable traders. And typically these are on fresh news. These are like the stocks that trend for a day and a half and then die out. When you put yourself in that room, right, you're in a room that's overrun by humans rather than being overrun by algorithms. And all that you have to do now is be a bit better than the other humans. There are some small algorithms running, but the market cap on these stocks is typically going to be quite a bit smaller than a blue chip. So if you think about this fundamentally, the algorithms, it's not attractive to them even if it's moving because they have too much money, right? If the market cap is like a few $1,000,000, less than $100 million, right? They can't put enough money to work. There's not enough liquidity available in the level 2. There's not enough depth. It's not worth it. They will underperform the S&P even if they kill it on these stocks because they can't put enough money to work. But us, the little guys, we don't have that problem, right? So listen, I think you'll like what we have going on. It requires discipline. It requires risk management. You still have to trade well, like a professional, okay? But there's a saying, you know, in the circles of full-time, even part-time retail intraday traders, and it's gained popularity in recent, even just months, but in recent years especially. And that saying is you're only as good as the stocks you trade. Okay, because, I mean, listen, guys, you take the best intraday traders on the planet. You take me, and not that I'm necessarily saying I'm you know, there's always going to be people way better than you. But you take any of the best, you take myself, anybody. You put them in a room and you say, you have to trade Apple all day, every day. You have to take 10 trades a day and you have to do it for 6 months. I will speak for myself. I will definitely lose money trying to scalp Apple if I'm forced to take a lot of trades on it and I have to do only Apple every day. And they will tell you the same thing. The best traders on the planet will tell you the same thing. There's just no edge, right? You have to only trade the setups and the blue chips that have edge. And where can we find other edge to beef up the amount of trades? Well, for me, it's in-play stocks, okay? It's you're only as good as the stocks you trade. So, listen, if you want, take a look. Link in the pinned comment. I'll see you inside. If you got value out of this video, please leave a like on the video on the way out. You have no idea. It helps out tremendously to help me keep covering NVIDIA reliably every single day. I appreciate you guys, and I'll see you in the next one.